at one point, one guy sort of wanted to suck up to the boss. So he volunteered to get tased
Holy shit.
in the boardroom. I mean, you couldn't do it now, like the human
Right, right.
resources
Yeah,
people would
HR
fall
would be
over,
able
right?
to do
But yeah,
that.
sure enough, he stands there and they
Yeah.
shoot him and
One, two,
okay, it
three,
works.
four.
All opinions expressed by Chris, Michael, Zach, and their castmates are solely their own opinions and do not reflect the opinion of 5i Research. This podcast is for informational purposes only and should not be relied upon for any investment decisions. Employees of 5i Research may hold positions in the securities discussed in this podcast.
Looking at the 2020 mini crash that we had, it was about a 30% drawdown in a short amount of time. And then we had this long extended bear market of 2022 with high interest rates, high inflation. And now, 2024, we're at all-time highs. So things are looking good again. But how do you feel about kind of the markets today, and what's kind of your overall take, I guess?
Yeah. So generally, the markets run on interest rates and earnings.
Right?
Everything else really is kind of noise. Um,
Mm.
and corporate earnings declined for 3 quarters of 2023, but now they're rebounding. The fourth quarter showed growth again, and we're starting to see some pretty good numbers, and the outlook for 24 is pretty good. So corporate earnings are good. Interest rates, they may not go down when people think, but they're probably not going up anymore. The
Right.
inflation scenario has been, I don't want to say inflation's been defeated, but it's probably not going to be the next problem. And so those two factors, which are the most important factors, are positive for the market. Um, when interest rates went up, $6 trillion went into the money market area of the world, about
Wow.
3 billion,
Wow.
3 trillion institutional and 3 trillion retail. And as rates
Wow.
go down, or as the market goes up, some of that money is going to come back into the market.
Yeah.
So
Rushing in from the sidelines.
that's generally positive. People talk about valuations, and it's an interesting point because in many of the companies right now, their valuations, their stock price is going up, but their earnings are going up at a faster rate. So
Right.
you have
Right.
you have situations where a stock might have doubled, and this is sometimes hard for people to understand. The stock might have doubled, but it's cheaper than it was before because their
Right.
their growth rate is so high. And so you're seeing a situation like that where people are always kind of worried about valuations, but in reality, the fundamentals are pretty good. So I don't like the two wars that are going on, or I'm sure there's some other regional wars, but there's two wars that are, potentially going to hurt the world if they can't be resolved. The China slowdown is not necessarily good for the world. Um, a strong U.S. dollar is good if you're a U.S. investor, but it's bad for most other people.
Mm.
But I think, am I worried about a crash this year? Not really. You're always going to get corrections, and everybody says, "Oh, should I sell now?" It's like, I don't know. I don't know when you're supposed to sell. Just buy a good company, and
Yeah, that's it.
that's really the key. But yeah, I'm not really worried.
Okay. Yeah.
It's a normal year, Chris. So in 2022, you could be a company that does really well, and your stock goes down 40% because there was an
Yeah.
inflation number that day. Yeah,
That was wild. Yeah. Yeah.
very, very
Just
hard to
really.
manage that scenario. But now, if a company does well, it goes up, and if a company does bad, it goes down.
Right.
I can
It's more.
operate in that environment.
Yeah. A little bit more normal, more rational.
Yeah,
Things make a little
exactly.
bit more sense.
Exactly.
Yeah.
You're not
No.
scared to open your computer in the morning.
Yeah, that's right. Yeah. Yeah. No, I remember in 2022, the market was going down pretty rapidly, and just kind of lots of volatility. And I remember sending out the meme to everyone that, Michael Scott from The Office saying, "Okay, I'm ready to get hurt again." So, it's kind of my key takeaway from 2022. That.
Well, somebody once asked me what my job was like in '08, and I described it. Says, well, you go into the office, you have your coffee, and then a couple of people come in and hit you in the head with a shovel for 10 hours, and then you go home. And then
Yeah.
the next day you come back. That's what it's
Sounds like a
like.
fun day.
Yeah, exactly.
Oh, that is rough. Yeah. Well, thankfully we're through that now. And yeah, I totally agree about 2024 being, I think, what will be a positive year. I mean, we have a pretty resilient labor market, good economy. Uh, my standpoint on inflation is that it's a lot has to deal with base effects, and I think that we're going to see inflation gradually come down. Just and mostly actually due to real estate and just housing. I think all of that lag data from the real time versus lag will really come into play. I think middle of this year to later end of this year. So, and then I think that helps the interest rates. And then from there, uh, lower interest rates typically means businesses and individuals do better. So
Yeah,
that all.
it's a question of confidence, right? Loyal and
Right.
predictable.
Right. Yeah.
I
That's
mean
true.
that the election, who knows? The election's going to cause
Yeah, that's right.
volatility. I'm not going to call the
Yeah.
election, but I can pretty much guarantee the market's going to be going crazy for a while during the
Yeah, that's right.
election.
So some options play will come into handy around that time, I'm sure. Um, okay, that's awesome. Yeah, thanks for that. So that was kind of stock market stories. Hopefully, individuals, investors kind of gain some insights into the markets there. So really interesting times, and lots of lessons to learn from that. So next up, I'm kind of pivoting here, questions a little bit, but this one is really relating to individuals at different points in their lives. Um, so, Peter, do you have an investment tip or piece of advice for, a 25-year-old? So your average, basically Gen Z or Zoomer, as we like to call them.
Yeah, so I actually have a TikTok account, so I see a
Oh,
lot of
nice.
financial stuff on
Oh, okay.
TikTok.
There we go.
Um,
Yeah. So you follow 5 Eye Research, maybe, eh?
of course.
Yeah.
So for the starting out investor, I would just say invest in quality and keep your fees down, and don't trade. And if
Mm,
you buy a low cost ETF at no commission, and you're going to be okay. And if you continually invest, then you're going to end up in very, very good shape. So the whole take 10% of your paycheck and invest it, and don't look at it for 10 years, and you should be very, very happy if you're doing the right things. And I see a lot of people trading options, or they're trading the meme stocks and things. Like, just stay away from that. Just buy some quality companies, and then buy some more of them. And if the market goes down, buy some more. If the market goes up and you have an extra 500, buy some more, because
mm,
your absolute advantage over everybody else's time. If you're 25 years old, that is the absolute bonus advantage that you've got, and you don't throw it away. And I know a lot of young people don't have a lot of money, but if you do it all the time, then you don't notice it. And if
yeah,
as you get a raise, you put in 10%, and suddenly that 10% starts to be meaningful as you go through your career. And next thing you know, you're 40 years old and you're sitting on a couple of $1 million, and things are looking pretty. And it's I don't want to say it's easy, but if you start young, it's way, way, way easier.
right,
It's
right.
it's still not easy, but it's certainly easier than starting at 45. And
Yeah.
so, but everybody keep in mind that everyone's going to try and get you to do something else. And
Mm,
so the urge to be active, you have to fight. And honestly, you have to fight the urge to sell. If you're up on something, ask yourself why the other people are buying it. You have to
mm,
fight that urge to sell, because you want to have something that compounds for 25 years.
right.
And I like to say, you're never going to get a stock that goes up 1,000% if you sell it after 100%. And it really is those 1,000% ones that will change your life. The
Right.
100% is nice, but it not necessarily going to be life changing. But if you bought Apple at $7 20 years ago, that's life changing, and that's really what you want to aim for.
Interesting. Yeah, no, I like that quote. And I've heard someone say that, all you need is one good stock, basically in your life and to make some life-changing money. And it is a really good point about compounding. It's kind of a wonder of the world. Humans, we don't really intuitively understand how compounding works. It's just not in our DNA to kind of understand things exponentially, but rather we understand things linearly.
Right.
So it really a fascinating thing to once you understand the concept of compounding returns
Yeah.
and how starting at 20 versus 25 versus 30 really makes a big difference
It's
in
huge.
the
Yeah,
long
you
run.
can. I don't have the numbers in front of me, but if you invest from 20 to 30 and then stop,
Yeah,
you're going to beat someone who invests a lot more starting at 40.
yeah,
And you haven't
that's
done
crazy.
anything.
Yeah,
And
yeah,
my wife's a teacher, and once in a while she drags me into the class to talk about finance. And I tell them, I'm lazy. I like to make money and not do anything. So if I have
Yeah.
a dividend stock and I get a raise once a year if they raise their dividend, what have I done? I've done nothing.
Yeah.
If the
Yeah.
stock
That's
goes
right.
up 10%, what have I done? I've done nothing. It's awesome.
Yeah.
It's the best. It's the best job ever.
Yeah. It's a good trade-off. Yeah. No, it really is. Um, that's awesome. Yeah, that's really good advice. I totally resonate with all of that, and I think it's really important for investors to know. And then, kind of looking at the same advice or same kind of concept. Do you have some sort of investment tip or a piece of advice for someone that's, let's say, 65 years old, kind of your average baby boomer?
Generally, people are far too conservative, and especially if you're sitting on a house that's worth a lot of money, it's debt free. You don't have to go all bonds when you're 65. The investment industry will sort of tell you you have to be super conservative as you get older, and that's not necessarily true for everyone. If you have a pension, you know that's your fixed income component. You could go all stocks if you have a pension. I have
Right.
a friend of ours. There's two teachers. They have a teacher's pension, both of them, and it's indexed to inflation. And yet he's sitting on 40% cash, and it's like, why? Why are you
Yeah.
doing that?
Yeah.
And he's like, oh, I'm worried about the market. It's like, okay, well, when will you not be worried about the market?
Yeah. Yeah.
Is that ever going to happen? And so, yeah, you have to take a look at your own time frame. And of course, lifespans are getting much longer. And so, there's actually a study that was done a couple of years ago saying, it's almost better to be more aggressive as you get older. And I wouldn't necessarily recommend that, but
Yeah. Yeah.
each individual is different. And I wouldn't. I guess for a 65-year-old, I wouldn't take a cookie cutter solution because your
Yeah.
situation's going to be different than the cookie cutter solution. And you don't want to be average. You want to be above average. But from the older clients that I know, they have too much money because they don't
Right.
spend. Their spending in retirement is nowhere near what they expected it to be. And then
Right.
they sell their house and move to a condo, and now they have another $500,000 in capital
Right.
that they don't know what to do with, right? So,
Yeah. Yeah. It's
yeah, have some
kind of like
fun,
the
I guess, is my suggestion.
good. Enjoy life, have some fun, love it. Yeah.
Exactly.
It's kind of like the difference between risk tolerance and, I guess, willingness for risk. It's, you
Yeah,
know,
yeah. I mean,
um,
everybody's personal, and I
yeah,
certainly wouldn't want
yeah,
to see somebody, invest in the stock market if they were withdrawing their capital on a regular basis. That's
right,
completely different.
right. Yeah, no, and totally. And it does seem like there are some individuals in their 60s, maybe 65, that maybe they're thinking that their risk tolerance or ability to take risk is lower than it really is. So you're kind of saying there's still lots of life left, still lots of time
Yeah,
to
absolutely,
make money in the
exactly.
markets, and so keep your money in kind of fairly aggressive or more growthy type names to continue that path forward, because there is still time to compound. Yeah.
Yeah, and that's a good point. I'm glad you phrased it like growthy type names because
Mm.
you can get growth names that aren't aggressive, like aren't
Right.
particularly aggressive. I mean, certainly
Right.
in my universe of small caps, it's not for everyone. But there's lots of companies out there that are growing nicely, that are $100 billion companies that have been around forever that generate cash flow. And maybe they don't pay a dividend, and so people don't like that. But then right now under our current tax regime, you don't really want a dividend because capital gains are
Mm.
taxed at a lower rate. So, is that aggressive? I think that's not aggressive because you're paying less tax on a company that's got lots of cash flow and
Mm.
is growing. I would
Yeah.
say, it's
Pretty
maybe you
logical.
shouldn't do it the other way. But yeah, so you can be growthy and still conservative for sure.
Right. Right.
It's if you're 65, you don't want to be buying a $5 million company that may not make it next week. But
Yeah, that's
100-year-old
right.
company that's been around, it's still growing, so there's nothing
Yeah.
wrong with that.
Yeah, no, and it's funny because when we look at growth and growth names, I mean the Magnificent Seven, they could be maybe considered, part of them could be considered growth names, and yet they make up, what is it, one quarter, one third of the entire stock market basically. So it's interesting when we phrase it that way, that one investor that's buying the S&P 500 is really buying almost one third growth stocks. So
Yeah, yeah,
at the
and
very least,
which is perhaps why it's outperforming Canada so
yeah.
so much.
Yeah. Yeah. Oh yeah. Yeah. Let's hope that the TSX kind of pulls something later this year, and we can get some all-time highs. So
Poor TSX.
yeah, help out some Canadians here. Okay, yeah, and then looking at your investment criteria, your screening criteria, I know this from working with you and just talking with you and things like that. But for our listeners, one of Peter's main things that he looks at is picking stocks that have recently hit 52-week highs. So can you talk a little bit about why that is and why it's so important that when you screen for names that they're hitting 52-week highs?
Sure. And it's so funny because people just look at me like I'm from another planet when I tell them that this is my best tip ever.
Yeah.
But keep in mind that I do look at small companies, and there's a lot of small companies in the world. And so one thing I like to do is I like to let other people do their homework, right? So if there's 700 companies, I can't look at 700 companies. But if 7 of them are continually hitting new highs, then I know one thing for a fact. There's no guarantees in the market, but I know this. I know someone's paying more for this company, and now I have to find out why. So now I've got 7 ideas out of 700, and I can focus my time and look at these companies. And maybe 3 of them are promotions. I don't care. Maybe one of them, got taken over, so that one's done. But now I got three left that somebody somewhere is paying more than it's ever traded before. But then I go look at that company. It's like, you know what? This company's growing fast. They have no debt. They have lots of cash, blah, 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 blah. I can see why someone's paying more for it. And so it's a really, really good indicator to sort of filter out some companies. It may not work so well with $100 billion companies, but for the little companies, it's spectacular. I think it's a really, really good idea. And some of my best ideas have come from that type of screening. But there is an advantage, right? If you have a higher stock price, there's 2 things that happen that are beneficial. One's beneficial from an investor standpoint, and if you own the stock, it's beneficial to you. More people are willing to buy a larger company. It's just a fact. It's just there's a bigger audience of investors. So if your company is $50 million and your stock doubles, you now have a $100 million company if nothing else has changed. And at 100 million, the value of the company, there's thousands of new investors that will buy you, where they won't look at you at 50 million. And you sort of you look at it and you go, well, that's stupid. They should have bought it when it was cheaper, but they can't because they have, it's institutional money, or it's too much money, it's too small. But largely it's because they never heard of it before, right? And just like me, I'd never heard of it. And so there's a whole different audience. And it's the most fabulous thing is when a stock changes its valuation just because it moves to a new market cap, because nothing's changed. Your risk hasn't changed. It's the same company, same management, same everything. But now it's worth 20 times earnings instead of 10. It's like, it's the best. And then of course, if that company's growing their earnings, like if they're growing their earnings at 100%. So now if your earnings grow at 100% and your valuation doubles, you've now got a 400%. It's like, it's the best thing ever. It's like free money. So that happens when small companies get a little bit bigger. But the other thing that's truly beneficial to the company is their cost of capital goes down. So if you say you need $10 million to do whatever it is you want to do, if you're a $1 stock, you have to sell 10 million shares to get your $10 million. If you're a $10 stock, guess how many shares you have to sell? You have to sell 1 million shares. And so that cost of capital is a huge advantage. And this is where some of the larger companies can just destroy the smaller companies because their cost of capital is so much lower. And so as a shareholder, you don't want to be diluted by 10 million shares, but you're okay if you get diluted by 1 million shares. So that company with a higher stock price has got an advantage over the tiny company. And that's a true competitive advantage if you're looking at those 2 specific isolated companies.
Nice. That's great. No, it's a really good, it's a good screener. And, I think we've seen a lot of companies come through the 5i coverage list and other kind of names that we brought up in the Q&A just based on those factors. So,
absolutely.
And we've seen a lot of successes in those names. So that's a really great screener. And it's funny that people often, maybe view it as being too simple, but it's often, the simple things in life that
Keep it simple, yeah.
are the best. Yeah, you got to keep it
You
simple.
know,
So,
why get all complicated with, the RSI index and the MACD
yeah,
technical indicators? It's like you've got
yeah,
someone else telling you that this company is worth paying for, and now
right.
you got to find
Yeah.
out why.
Okay, yeah. So we've got a final question here. We're going to end off with some stock picks. So, Peter, do you have a favorite U.S. stock and favorite Canadian stock in mind?
Yeah, okay. These,
Might
the
get
US ones are a
problematic.
little the US ones are a little tougher because some of them have run
Okay,
really, really, really hard.
fair.
But
Yeah.
one of the ones that hit a new high today is Axon
Hmm.
Enterprises, and you might know it better as Taser. So they're the company that invented Taser. And the reason I like this one is because when we were at Sprott actually owned 14% of the company, and since it's stock market stories, I got another story for you here. So
Yeah.
we own 14% of Taser. It was called Taser at the time. They changed the name to Axon. And they would come in, and talk about their company and, say how business is and blah, blah, blah. And then at one point, one guy sort of wanted to suck up to the boss. So he volunteered to get tased in the
Holy
board
shit.
in the boardroom. I mean, you couldn't do it now, like the human
Right, right.
resources
Yeah,
people
HR
all
would be
over,
able
right?
to do
But yeah,
that.
sure enough, he stands there and they
So,
shoot him, and okay, it works. Okay, that's our due diligence on that investor, right? So it's kind of a little famous story at Sprott that this guy got tased.
that
But
is,
anyway,
wow.
so they came out with Taser, and what I like about them is it's now kind of the IBM option. So in the
Hmm.
old days when computers were first being built, and you needed a computer for your company, or you needed to buy 50 computers or 1,000 computers for your company,
Right.
IBM was the gold standard. And if you went somewhere else for cheaper
Hmm.
and it didn't work, you'd lose your job. You'd be totally screwed. And so it was a big advantage having that brand name and the quality and the consistency and the market reputation. And so Taser has been around forever. And now, if
Hmm.
you're a police force, it's like you can't go to Joe's automatic Taser company, right?
Yeah,
Because
right.
if it doesn't work or it kills
It's not-
someone, like you're
Yeah,
in big trouble. Your bad guy gets away if it doesn't work. Also,
yeah,
um,
yeah, and
and so they totally own the U.S. market. Now they're starting to move international. Then they moved into
okay.
cameras because, of course, if you're a law enforcement officer and you're tasering someone, it helps if you have the camera. So they have the camera. And then they moved into a subscription service, which makes it much easier for municipalities and police forces to buy. You don't have
Okay.
to come up with $100 million. You can pay them $10 million, a year, kind of thing. And so
Interesting.
investors, the market loves subscription stories, of course, because it's
Yeah,
just
that's right.
predictable.
Yeah.
And
Recurring.
they've
Yeah.
added all these little products, and they basically sort of slowly are becoming the dominant force in that
Hmm.
particular market segment. And
Very
so,
interesting.
the company size of the company is, 15 billion, or I don't know exactly because I didn't check it today, but it's in that range where it's big enough. It's been around forever. They've been through a recession. They continue to
Yeah.
grow. They're making lots of money. They have cash on their balance sheets. Can't tell you how much exactly, but their balance sheet's in fine
Good
shape.
amount. Yeah.
And importantly, the founders are still in charge of the company.
Okay.
So they learned through all their growth hiccups and their problems, and it hasn't been a 100% straight up ride. So they've learned from their mistakes, and they've managed to build from their successes. And so it's a situation where they're just kind of chug along nicely year in, year out. Um,
Wow.
it's always dangerous to say, but they're probably a little bit recession proof. The
Yeah. Okay. Right.
bad guys are still bad guys during the
You don't
recession, and
think days off? Yeah.
you can even argue there's more bad guys during the recession, right? If they're
Fair.
they
Yeah.
need,
Good point.
and so it's just kind of they just kind of go about their business, and it's like, okay, this is what we do, and every once in a while
Yeah.
they come out with a new version or a new product, and they build from
Yeah.
there. And so the stock's doing really well, but it's not really that expensive, and it's not really well known. Sure, it's
Yeah.
it's well known. It's well known in the mid cap investment community
Yeah.
because
Right.
been around for 30 years. But if you ask somebody on the street, no one's ever heard of it, right? So
Yeah. Yeah.
there's plenty of potential in terms of that. So I really kind of like what they're doing, and um, I like stocks where I don't have to worry about. I don't have to worry about.
Right. And it's such a simple product too. It's pretty basic, just a taser. But like you said, they were adding cameras and other things like
Yes,
that.
yeah,
But it is often, the products that we're familiar with, things that we can understand that often work best. And I've seen that stock's price chart, and yeah, it looks really great. I mean, over a long period of time, it's really
Yeah,
been up and to the right.
it,
So
it's
yeah,
been it's been really sort of steady. I mean, I
yeah,
think in 2003, 2004, they got hit with some lawsuits and the stock was very volatile. But
okay,
their product usually what happens when someone gets hurt, there are usually other factors like like
mm,
they're on drugs or something like that or whatever.
right,
So it's not risk free. There's risk to any story, but I like what they've done very
for
much so.
sure.
And then on the
That's
Canadian side, there's one called Lumine Group, and Lumine's a spin out of perhaps the best company, best stock over the past 20 years in Canada, Constellation Software. So they spun out, and Constellation still owns a very large percent of the company, and the stock's up 20 or 30% the past couple of months. It's doing quite well, and it's one of those ones where they're just going to follow their parent company's mo. So Constellation has become a behemoth of 75 billion market cap from basically nothing by going out on an acquisition spree, but being very careful in their acquisitions and only buying companies that are cash flow positive, and most importantly, never issuing new shares. So they take cash flow and they buy another company with cash flow. And then that creates more cash flow. And then they buy another company with cash flow. They're not using shares to do this. And so Constellation's gone for the past 20 years with the same share count as 20 years ago. And the stock has gone from $18 to $3,800 in 15 years. I mean,
yeah,
it's just been a monster. It's just been a monster.
incredible.
And
Yeah,
so now people are calling this Lumine the baby CSU. It's way too early in its history. It's only been public for just over a year, so
right.
you can't really say that, and they could
Mm,
screw up. But it's one of those ones where it's like you've got perhaps if put it into a family context, you've got the absolute best mom and dad shepherding the kid and
yeah,
telling the kid what to do and telling the kid all the mistakes they made, and the kid's listening. Like the kid's gone out,
yeah,
and last year they grew at 86%, and they did
crazy.
a bunch of acquisitions. So far the
Yeah,
kid's listening to the mom and dad, and starting to prosper, and eventually the
yeah,
kid's going to grow up, and and then hopefully he'll grow up at the same rate. That would be awesome,
yeah,
but it's
right.
really working out so well. But it got to stress, it's only been
Yeah,
12
that's right.
months.
Yeah, new issue.
Got to stress, it's a much smaller company than Axon even.
Mm,
It's still multi-billion-dollar company, but it's not a household name. They could screw up on an acquisition. They can make a deal that doesn't work out. Um, they could, I'm not in charge of the company. They could issue shares if they decided to. I
right.
really would be shocked. I'd fall off my chair if they did that. But
Yeah,
again,
yeah.
I'm not making that call. So you got to be careful of what they do. But it's one of those ones, and yet no one's ever heard of it. They trade on the venture exchange, even though it's a multi-billion-dollar company. The venture exchange is usually for much tinier companies. And the reason, and this is kind of why I like it. The reason they're on the venture exchange is because they don't want to pay the TXX fees. The
Oh,
Toronto Stock Exchange fees are too high.
okay.
So
Yeah,
they're like, we know what we're doing. We're running a company.
yeah,
Like, what do we need to pay the Toronto Stock Exchange $500,000 a year for? Right? They're like, screw
that's
that.
great.
The parent company, in the early days, they used to do conference calls, and you'd have three or four executives, around a table and talking to investors, and they don't even do that anymore. They're like,
Mm,
why would we put four of our executives, on hold for an hour to talk to you people? it's it's just brilliant. I just love everything how they run their company. And
that's wild.
again, and it only works if you know what you're doing, right? Obviously,
Right, right.
if you're doing stupid acquisitions, you might want to get on the phone with
Yep,
investors and explain yourselves. But since they're
right.
doing good acquisitions, it's just sort
Yeah,
of runs itself as far as the
doing,
stock goes. Yeah.
right. Yeah, doing all the right things. Stock price is going in the right direction. Um, and like you said, yeah, they're making good acquisitions, and it's been an interesting company, and they've been groomed really well by CSU management, like you
Yeah.
said. So,
Yeah.
yeah, certainly one that we've been kind of chatting about in the office and talking about in the Q&A. So, definitely a little bit of a growing into a little bit of a five-eye favorite here. So,
Yeah, it is. And the
yeah.
other thing that's interesting, when you don't issue stock, the brokers on Bay Street don't like you because they're not
Right. Right.
spinning big fees out to people. So I think there's only
Interesting.
one analyst. I think there's only one analyst on the stock right now, and
Yeah.
even though it's probably the best mid cap stock in Canada, really, in terms of reliability. But they don't make any money off it. Doesn't trade too much. It's not an active trader, so they're like, yeah, I'll focus on something else. And so it's one of those ones where it's probably going to be unknown until it's much bigger, right? And
Right.
so if you
Right.
get it in, if you get in early, then later on it'll be much bigger, and people will be talking about it 10 years from now. It works
That's
out
great.
fine for me.
Yeah. Yeah. So a good underfollowed name there.
Yeah.
Lumine, the ticker is LMN. Yeah, that's a really good name, and hopefully we see that one like continue to flourish and kind of do well here. So that's
Yeah, that's
awesome.
one of those ones. I call that one. I can't say I would buy it for my mom because my mom's 99, so
Okay.
it's probably not the
That's
stock
pretty
for a
right.
99-year-old.
Yeah.
But if you've got like a 40-year-old aunt who doesn't know anything about the market, it's one of those
Right.
ones where you buy
Yep.
that and tell her to look at it in 20 years, and if she doesn't like
Right.
what she sees in 20 years, she can disown you. But more likely than not, she'll buy you a car.
Yeah. Moderate sized home. Yeah, you never know.
Yeah, yeah.
That's great. That's awesome. And then I do have one final question. This wasn't in the agenda either.
Uh-oh.
But trick question. Yeah, no. Um, Peter, what do you think of the Apple Vision Pro?
Okay, I haven't used it. I haven't seen it in real life. I've just seen it. I read yesterday that it's so cool, but buy the next version. So
Okay.
it's like it's so cool, but wait until they've tweaked it all a little bit more.
V2, V3. Yeah,
Yeah, I mean the price point is crazy.
it's pretty tough. Yeah,
So
yeah.
there's always pricing's always interesting, right? Because if you priced it at $1,000, you might sell 10 times as many as you are at current price. But it's pretty cool. I gotta admit, I don't know.
Yeah, yeah.
I don't know if it's the future of the world, but I think it's a viable product. Unlike some of other launches at other companies, I think it's going to be here to stay
Right.
in maybe a different form, but certainly be here to stay.
Definitely. Yeah, no, I totally agree. Yeah, from what I've seen, the videos that I've seen, it looks really cool. I think there's a lot of use cases for it. Whether we're going to be wearing, was it like 10-pound, headsets on our head forever? I'm not sure, but definitely, yeah, I think it'll get smaller, and so kind of an interesting development. The Vision Pro alongside AI developments, I think this year will be shaping up to be really fun. So I think we're going to see a lot of cool things come out of this year. Yeah.
But I do think Apple needs to buy something as well.
Right.
Unfortunately, the Magnificent Seven are probably going to be banned from buying anything. But I thought I thought Apple should have bought Netflix 10 years ago.
Wow.
On the content side, and there's all these
Yeah.
little. Or I think Apple should buy Garmin. And they could totally capture the wearable market and the auto
It's a
market.
cool acquisition. Yeah, I like that.
I don't think the government's going to allow any of these, but so they're just going to keep spending their money buying back their own stock. So
Yeah, that's right. Just reduce share count by another 50% over the next 20 years or whatever it is. Yeah,
exactly.
that is pretty crazy. Okay, no, that's a good response. Thanks for that. Yeah, always curious to hear your thoughts on tech innovations, AI, things like that, and we've got lots of cool things coming up in the coming years. So so I want to thank you for coming on the show today. Really appreciate your time. And I know that listeners will appreciate your wisdom and all of your insights that you've gained over the years.
Thank you. It was a pleasure. It was fun.
Yeah, that was a lot of fun. So for those that aren't members of 5i Research, Peter is heavily involved in our Q&A section where members can receive answers to their investment related questions from Peter, myself, other analysts. But that's all that we have for today. We hope that you enjoyed this episode of our podcast and learned something new about the Canadian and US markets. If you want to access more exclusive content and insights, don't forget to visit our website at 5iresearch.ca and sign up for a free trial if you haven't already. You can find the link in the show notes below. And if you like this episode, please give us a thumbs up and subscribe to our channel for more updates. Thank you for listening, and we'll see you next time.